Welcome to the webinar series from Green Story. Today's webinar topic is fashioning a greener future, bridging sustainable fashion and biodiversity conservation. And today's speaker is Patrick Vandesteen. He's a co-founder and partner at Reesets. Let me take you briefly through the background of Patrick. He had a 30-year career and has been a management consultant, corporate executive, and entrepreneur. And his specialization has been innovation management. And he has been interested in people and companies adapting to new business reality of globalization and has worked on insights, data processes, and decision-making tools. He was the director of innovation and change, first at NetWest and then at Fortis Investments. And at Fortis Investments, he had created a number of world firsts in local market development, most notably in China, Turkey, and Indonesia. He has been appointed executive chair of the asset management acquisition of ABN AMRO by Fortis, RBS, and Santander. And his innovative integration approach made it one of the few successful programs of that transaction. And since 2019, he co-founded Reesets, which is a new marketplace where companies are moving to nature positive, can buy the rights to realized multifunctional resilient ecosystem restoration from professional nature as a service landscape and communities. TNFD recently recognized Reesets for its alignment with the coming Montreal Global Biodiversity Framework. And as a community volunteer, he chairs two communities which are seeking which are seeking to make the transition to landscape as a nature as a service business and livelihood. And he is also a guest lecturer and PhD supervisor on behavioral economics and nature as a service solution for University of Bath Management School. Let me take you through the webinar agenda today. I will briefly introduce Green Story and its platform, and we'll talk about then Reesets case studies and NRGs, how NRGs can you can work with a Green Story to get NRGs, and then we will open it for a Q&A where you can ask your questions. Let me take you through the Green Story. Green Story is the leading sustainability intelligence platform exclusively crafted for fashion industry, anchored in data excellence and empowered by a team of experts. Green Story drives sustainability transformation by delivering precise insights into environmental products' environmental footprint. Our tools masterfully manage and offer transparency in supply data right into the buyer's journey, crafting authentic stories for consumers, coupled with a trusted marketplace for impactful environmental offsets and stringent compliance tools. We turn intricate challenges of sustainability into scalable, credible, and data-backed solutions. This enables manufacturers and brands in the fashion space to transform into leaders in sustainability, supply chain operational mastery, build credibility in the market, and future-proof their green claims. And we are a team of 50 people and have been working with close to 200 plus fashion brands across the globe, including Pact, Pangaya, Farfetch, Lululemon, and have been in business for the last 8 years. Now I will hand it over to Patrick to talk about how and learn more about NRGs. Patrick, please go ahead.
Thank you. Good afternoon, everyone. Talking to you from the UK. A real pleasure to have been invited to this webinar, and a real pleasure as well to just introduce you to the market concept that we are proposing. As the vendor said, my background is not nature conservation per se, so I'm not here to try and sell a proposition of stuff that we have developed and we're looking for buyers. My background is in financial services, and I've been intrigued together with my colleagues for a while now as to how we could facilitate greater nature conservation and restoration by making the flow of money go a lot more efficiently. And we're speaking to some of the stuff that you see on this slide here. This is a large 65,000 hectare landscape in Costa Rica. And that this landscape could become a new haven of biodiversity, but of course, that would require funding that runs into the millions for decades to come. And the current funding model does not support that. So we applied ourselves to kind of solving that question. Let me start, and if we move to the next slide, the origin of our marketplace, because that's what we are. We are an exchange between enterprises that restore nature as a service and buyers that like to buy the credentials of nature positive. And our story starts with the realization that in the net zero 2050 targeting, that there is a problem, in the sense that there's a glide path towards net zero 2050, but we are above the glide path. We are too slow in reducing our emissions. And as a result, even if we now accelerate, and that is at best doubtful, we need to find not just sources of reducing emissions, but we need to also find sources of removing emissions that have gone out and need to be extracted back out of the atmosphere. And for that, the kind of only real reliable tool at scale that we have is nature. So that is one reason why we're finding an increasing demand on the corporate side for biodiversity or nature restoration in a more general thing. The other reason, of course, is that we've all started realizing that while climate change is not good, biodiversity is a lot worse, because it really speaks to the essence of life on the planet. And so what we are seeing, and by virtue of the actions and strategies that you have, I'm sure that is the case at your company as well, is that nature positive 2030 or 2035, whatever companies said by way of time frame. But nature positive is starting to become the new apex goal for corporate good citizenship, because it includes and the net zero target, but also adds to it the biodiversity target. That's good for planet, it's good for people, but we would argue that it's also good for corporate profits, in the sense that nature positive can be turned into a source of competitive differentiation. It's not just merely a cost of compliance. And that speaks to companies, because we talk to many enterprises that are investing heavily in their emission offsets and so forth, but customers don't recognize it, don't give them the credit for it. And we think that the nature positive play has a lot more potential. If we could move to the next slide, the best example of that, the clearest example of that, is probably in Poland, where a lager brand, a beer brand, adopted a strategy of identifying itself completely with the impact it provides on nature. And what this brand, it's owned by the Asahi Group, it's called Zuber, which is the Polish word for bison. So what this brand does is it makes the claim that money that it provides for nature restoration helps save the iconic species of Poland. And in all of its marketing, it has made a big focal point of that, inviting customers to engage with that mission, inviting customers to come into the restored landscapes that are being funded by it, so that they can have a visceral experience of what that actually feels and looks and smells and touches, how that is. And what we've seen is that customers have responded. Customers have responded when they are in a bar and they have a choice between brands. They choose the Zuber brand. And market share has almost doubled from where it was 5 years ago. What the brand has also experienced is that it now needs to pay distributors less to promote and sell the brand on the premises, whether that's in retail or in bars. So its margins have improved as well. And of course, if you have growing volume share and growing margins, you are adding a lot of profit to the bottom line. Profit which can be reinvested in, or partially reinvested in, nature restoration. And now you have a kind of virtuous circle of, you're investing in nature, you can create a competitive differentiation, a competitive advantage out of nature, which allows you to increase revenues, which then gives you more money to go back into nature restoration. And what's happened here is they started just systematically with the image of a bison, but it's now being expanded, and the iconic species in play, and the landscapes that they're restoring now include wolves and bears, and just a wider spectrum of iconic species, again engaging the customer in a broader vision of nature. It's worked really well for them, and in discussions that we've had with other companies, that same thinking, where planet is essentially the 8th P of marketing, is starting to prevail. So how do we help in that? And if I could move to the next slide. So we are a marketplace, and what we try to do is make it easy for enterprises. Some are fully professional businesses, some are slightly less formal, but these are enterprises, organizations that dedicate themselves to the wholesale restoration of a landscape. And they can get some funding for that from governments often, and so forth, but they need an income. It's very difficult to find funding if you can't give that funding a return on investment. So they're looking for a way of monetizing the value add in the product markets. And we help them do that by essentially allowing them to bring to this marketplace, the Reesets marketplace, vintages of nature additionality. And in this picture, I'm trying to show you 3 vintages. So a landscape as it matures has more nature in it, more vegetation, more water, more fauna, more living organisms. And so that increase, you can digitally record what that is. You take almost a picture of it, and you can associate claims to talk about it, claims to claim it, to rights to claim it to that vintage. And we sell through our marketplace these rights. So what happens is that companies that, like Zuber, that want to make claims that they are saving the iconic species of Poland, they can make these claims because the nature additionality in which that takes place, they have bought the rights to that. It's their asset. It's not an IOU, it's not a credit, it's an asset that they have acquired that gives them a platform to speak from. Typically in a more temperate climate like most of Europe, these vintages can be cut every 4 to 5 years. One secondary ecosystem succession is ongoing. Again, obviously if you revert from agriculture, it takes a bit longer. That initial phase for nature to take off takes a bit longer. But because these landscapes can offer a return on investment later on, they find that they can come into the marketplace, the capital marketplace, and find commercial lenders, banks, or professional investors, equity investors, to give that funding. And that also solves a problem that many companies don't want to own, because a lot of companies, if I use a milk analogy, they don't want to buy the milking parlor, the fields, and the cow, when what they really want is the milk. And in our model, they can just buy the milk, the nature additionality, and other parts of the marketplace that have far more skill in financing long-term risk and opportunity. They can finance the cow, the milking parlor, and the field save. So that's what our marketplace does. If I could move to the next slide. How is that different from the kind of marketplaces, the nature marketplaces, the carbon marketplaces that exist today? But as I was saying, the current marketplace and the whole way it's growing up is around a project. if you want carbon offsets or if you want biodiversity improvement as a corporate buyer, as a corporate user of that, you need to buy the project. And you come in at the beginning of the project, and this project, it has typically two goals, one of two. One, it's an avoided loss project. So by virtue of your money, the forest that was there doesn't get chopped down. Or it's a future promise project. We will plant trees and we will do X, Y, Z. And then in 10, 20, 30 years from now, we will have carbon sequestration at scale. We will have biodiversity improvement at scale, etc. Future promise. And a lot of the verification, you have these agencies that do verification, they're not concerned about rating the quality of the outputs because they don't exist yet. They are concerned about rating the quality of project management and the governance of the organization. Are they using the right tools, techniques, and so forth? That's difficult because you're essentially trying to say, because the guys that are going to do it and the tools they're going to use are good, it's going to give you a good outcome in terms of carbon sequestration or biodiversity improvement in a decade from now. It's proven that that's very difficult, and you will have heard a lot of stories around South Pole and so forth. They've become somewhat discredited because the assumptions that they got verified have proven to be overly optimistic. So we do away with that problem. When you buy what we call nature restoration gains, nature additionality, that uplift, it's already there. We don't need to assume it. It exists. We're not talking about the trees that will yield apples. We're talking about the apples, and we measure them when they are on the tree. So we can say quite precisely how good they are and how big they are, etc., and how many of them there are. So when a landscape that has nature additionality to sell comes to us, we document what is there. And then it's that quantity and quality that we bring to market and that you as a buyer would buy into. A kind of nice side effect of the fact that it exists, which has certainly been the Zuber experience in Poland, is that for customers to appreciate that you are doing these things, it always helps if they can themselves go and experience what it is that you claim you have done. And of course, if the additionality exists, you can invite the customer to come into that landscape because it exists. When you go to a plantation that is just emerging, there's in some ways not much to see. And that's normal, obviously. But it doesn't speak to the imagination of the customer very much. And it doesn't leave the customer a warm, fuzzy feeling of goodwill. When you take a customer into a landscape where you're claiming the additionality, it has been created and you make claims about that, they see an entire biosphere around them. And I'm still to meet a single customer that says, I don't like it. And those feelings of goodwill, they obviously carry over when afterwards choices are being made in the retail shop or in the retail space in general. So that's the difference between our credits, if you will, our assets, which we call next generation assets, and the ones that have existed before. And it changes also the way we do verification. If I move to the next slide, where we are is we sit in the middle. So we want to aggregate demand, which will come from organizations like yourself that are keen to demonstrate nature positive goals and credentials and want to point to realize the additionality that you have helped create by virtue of giving the underlying enterprise revenues that allow it to go through the economic cycle of finding funding and investing more. On the other end, we want to offer a marketplace where these nature as a service landscapes can come with their supply and monetize it against a standard that everyone accepts. And what that kind of direct meeting of demand and supply creates is a pricing tension which reflects the true value of nature restoration. It's no longer just a minimum cost or a cost that you have to pay. You bid and if the market is deep and wide, you will find nature additionality priced at a level where it makes sense for you. And that's what, so our work is not to try and sell something. Our work is to create as rich a market by way of demand and supply, so that we have a very diverse offer that demand and supply can work with. And if we go to the next slide, I can give you a sense of where we are with respect to supply. So we're new. We started doing this about 1.5 years, 2 years ago. And in terms of supply, we have 3 landscapes or organizations with landscapes that we at the moment represent. The first is one that was on the opening picture. It's the Eden Project. Eden Project is an organization based in the UK. They're best known for a site that they have in Cornwall, where you can visit Mediterranean and tropical biome, and it's a whole educational setup, one of the most popular visitor attractions in the UK. But aside from that, which is kind of their flagship retail offer, behind the scenes, they have landscapes in Latin America, primarily, increasingly also in the US and Latin America itself, Central America, I meant, where they're supporting wholesale nature restoration. And the one that you saw is one in Costa Rica. They're doing a first trade on the Costa Rican one in order to trial it out, where they're selling 3,500 hectares of dry tropical rainforest. And we are in the process of marketing that at the moment to various corporate buyers. The second organization is the RSPB. It's a bit UK centric still. It's where we are based and where we started developing our marketplace. The RSPB is the Royal Society for the Protection of Birds. It's the largest nature conservation organization in the UK. It owns about 150,000 hectares here, spread around 200 reserves, and it owns about the equivalent of that overseas from the UK as well. It's very wetland focused. And wetland has a benefit that it's very, very nature rich. Wetlands attract flies, the flies attract birds, and so you get a very quick evolution of biodiversity and nature additionality in a wetland. The presence of water helps things flourish. And then the last one where we in the market is the Nep Estate. The Nep Estate's probably the most known rewilding project in the UK, in part because the co-owner of the estate has written a few books on it. It's at the standard of rewilding, and they have 600 hectares of farmland that they rewilded about 20 years ago, of which they are selling the delivered additionality. This is at the moment not a going marketplace. It's additionality on demand, in the sense that if there is demand, companies come forward and say, we wish to buy it. We go through the whole process of the measurement. In the fullness of time, when there is a more continuous source of demand and a more continuous source of supply, we can do this as a working marketplace, just like you would go to a commodity market or a London Stock Exchange and buy and sell as you want. In negotiation, because we recognize that the scale of that is interesting, but obviously if you're a large enterprise, you probably need more. In negotiation, we're talking to 2 landscapes, one in the UK, one in Europe. These are organizations that represent a series of projects called rewilding projects, amounts to about 155,000 hectares in the UK. It amounts to 5 million hectares in Europe, spread around 10 landscapes: Spain, Portugal, Italy, Poland, Romania, where we're really talking about very large ecosystem restoration, and you get fully functioning ecosystems, not quite African savanna type. It's not that size, but you have a system that actually can keep itself going. It doesn't need a lot of human intervention per se, in order to just keep moving and get richer and deeper and create more nature additionality. And those are important projects because they essentially create reservoirs of biodiversity that, if it becomes more difficult elsewhere, that we can tap into and find species to then transfer to areas where we want to restart things. So that is the supply on demand that we have. And as I said, we are in active marketing mode of it. We're talking to many TNFD early adopters. So TNFD is the Task Force for Nature-Related Financial Disclosures. Basically will oblige companies to start talking about the impact they have on nature and the risks and opportunities that arise from that. And what we're seeing is that particularly quite polluting, in inverted commas, companies, they will be compelled to do that, but they want to have a positive story alongside. They don't want to just talk about the harm they do, they also want to talk about the good they do. And they are our primary target base is companies that want to, like Zuber has done in Poland, say, here is the good we do, and we can do that with integrity because A, it's there, it's delivered, you can go and see it, and B, we have bought that right to talk about it, so it's our competitive advantage relative to competitors. I'll leave it there, but I'm obviously open for any questions at the end of the session.
Thanks, Patrick. I'll talk about some of the key tangible outcomes, and then we'll open it for Q&A. Like I said, we can build immediate customer trust and credibility with NRG credits, and as a brand, you will be showcased as a leader in sustainability fashion, since your brand will resonate with customers and their values. And in fact, this will empower communities in and around the landscape and the areas. So it will have that social impact. So in addition to that, if you have any other questions, do the welcome now. I have some questions as well. So let me start with those questions, and Patrick can reflect on them. Mm-hmm. So one of the questions is that came to my mind is how NRGs compare to carbon credits. Like, how do we differ between them?
Mm-hmm. Yeah. So I kind of highlighted some of it in what I said earlier. The voluntary carbon market is primarily a project market where the promise of sequestration is transacted. And on the basis of that promise, credits are issued. And we're going right to the back end of that market. So in our marketplace, first of all, it's nature, it's not carbon per se, although of course 50% of nature is carbon. So we sell it when it's delivered, when it's there, when it has grown, when the carbon is sequestered. We use a series of measurement techniques, which include satellite imagery, metric modeling, in order to quantify and qualify what is there, how much nature is there, and how much carbon does that nature include, how much biodiversity does that nature include. And on the basis of that, we sell a nature restoration gain, an asset that has within it many components. There'll be a carbon component in it, there'll be a water component in it, there'll be a nutrient component in it, there'll be a biodiversity component in it. Nature, everything that you would expect to find in nature is by definition of our credit included in that credit. So it can be used for a number of purposes. It can be used for competitive differentiation. There's a voluntary use. You have bought the claim, the right to claim, so you make it. And you speak directly to your customers to say, look, this is what we do. And to the extent that you want to visit it, if it is local enough, people can actually go and see it. feel good about things, and you can associate your name with that reserve. You can also use it for compliance. Compliance rules differ country by country, and in some, because you own all these individual ecosystem services that are embedded. If 1,000 tons of nature has been created and 50% of that, 500 tons is carbon, that carbon was sequestered. It wasn't there 5 years ago, it is there now. So in some countries, you could then use that where legislation, local legislation, compliance legislation permits. You can say, not only am I competitively using that vis-a-vis in the marketplace vis-a-vis my customers, but I'm also making the compliance claims, and I'm claiming that 500 tons in my example as abatement or an offset against emissions. And you could do the same with the water component and the nutrient component. In the fullness of time, we think that if you buy a wholesale credit, say you're an airline and you're really only interested in the carbon element, that you might then say, well, actually to monetize it further, I will sell the water component of the credit that I own to a water company, because they want that type of stuff. But we're not quite there yet. But you're essentially buying an asset that belongs to you and that you can own and use almost as you see fit. Of course, for compliance purposes, it has to fit local regulations, and they are different. It also means that it's verified in a somewhat different way. The current verification method is very focused on trying to figure out whether the assumptions that are embedded in the project are reasonable. And so when you look at the big rating agencies, they look at reality. Is what you're doing and the future reality that you're forecasting, is that in any way, shape, or form realistic? In our particular instance, the reality is there. You can directly observe it. The link is not, can be evidenced straight away. Measurability is another criteria that a lot of the verification agents use. Again, in our credit, it's directly measurable, because my example, the milk or the apples there, so you can measure it, and in ways that you can't, obviously, when you try and figure out what the yield of a project will be in the future. Permanence is, in the case of an NRG, more secured, because for us to allow people to come into the marketplace as suppliers, we expect them to be professional nature as a service organizations. We don't allow individual projects with a horizon of 10, 20, 30 years to our marketplace. They're not an efficient supplier because they come once and then they might disappear and never come back. What we want is companies like the RSPB or Eden that are in it for the long term. They're a business. This is what they do. It's imprinted in everything, whether their governance, the tools, the management, the way they think about landscapes. It's all around, we do this as a service, and the buyers of that will be companies, and they want high integrity output. So we organize ourselves, we manage ourselves, we control ourselves, we measure ourselves against standards of that level. We, as a marketplace, want to make sure there are no double entries, in the sense that a supplier would sell things twice. So by the virtue of using satellite imagery and so forth and running a central register, we can control that credits that emerge elsewhere don't duplicate the ones that have already been sold through our marketplace. Companies that come into the marketplace have to legally sign up to not sell the same credit or part credit somewhere else. And we have a blockchain technology, so every piece of information that exists around the credit gets put in the right sequence and is securely preserved. So we can always go back and see what was what, and does that duplicate with anything else that we can find elsewhere. By virtue of the entry barriers, we also check our suppliers on how they treat their communities. Typically for these very large landscapes, communities have to be involved because there will be, as is the case in Matambu, Costa Rica, there'll be multiple villages actually in the nature restoration domain. Plus, it has already happened, so it's pretty obvious to see. You can directly observe how communities are faring by everything that's going on. So we look at that, and we look at, as a criteria for entry, what their more social sustainability development goal missions are. So by the time an NRG comes to market, a lot of checks and balances have been put in place that would give a customer confidence that it exists, it's real, and it's managed for permanence, and it's managed with a community conscious sense that an entire landscape has to benefit from that, not just a few individuals that happen to own the land.
Right. Thank you. One more question. How would you price NRG credits?
Yeah. We price it as the way prices are established in the marketplace. A marketplace of supply and demand, the equilibrium price, is where a willing supplier will sell to a willing buyer. And we operate the same mechanism. When a company comes into the marketplace to buy nature restoration, they will have an idea as to the type and quality of nature restoration they prefer to serve their own competitive purposes. And they will be willing to pay for that to the degree that it helps competitive advantage, market share, pricing power, etc., etc. And that's going to be different for every organization. So the price that is offered, the bid offer, is not just a kind of, let's try and minimize the cost of compliance per se. Let's price it in such a way that it is a sustainable business opportunity for us. Our suppliers tend to come in from a perspective of, we have a minimum reserve price because we know how much it's cost us to do all of this. We know how much we need to pay back to the banks and employees and communities and so forth. And so they have a price that they will probably not go below. And then it's essentially a discussion. And if it was a fully functioning marketplace, i.e. there's tons of supply and there's tons of demand, you get the way prices are set in stock markets. Our aim is to create as deep and as wide a market as we possibly can, so that there are actually multiple prices. And think of it as this way: there will be different prices for a landscape that is next door to your operation and your customers can very easily go and visit it, versus a landscape that is far over the horizon and your customers can't that easily see it. There'll be different prices for a landscape that's just starting, but you can make claims about that already. You can take customers on that journey. It's just that there isn't an awful lot of nature on the site just yet, and prices where it's well established. And we want that differentiation. And it's the same when you go into, as an investor, into the bond markets, for example. You find all sorts of bonds, from the AAA rated bonds all the way down to very, very risky bonds, and prices differ. And the purpose of our marketplace is to, as I've mentioned before, try and bring as much diversified supply to the marketplace to face off to as much diversified demand in the marketplace, so that everyone can find something at the price that fits their purpose, be that supplier to reinvest and do more, and be that the buyer to acquire rights and make commercial and create commercial benefits around that. What we've seen roughly, so we use tons as a basis because a lot of people are used to thinking in tons of carbon, and you can think of tons of nature as well. If there's more nature, there's more weight of it, there's more volume of it. And 50% of nature, 45-50% tends to be carbon anyways in terms of weight. What we're finding in early trading is that the reserve price coming in for suppliers tend to be I say this in pounds, 1,000 to 2,000 pounds a ton, roughly. That's kind of what people think they should get. And then we've seen on the demand side, prices go from about that range to 10 times it, because one particular buyer thought that they could gain a few percentage points market share. They were a multi-billion-pound company, and they were willing to offer an awful lot more than what the suppliers had in mind. So the market has to find itself. What we're interested in at the moment, because it's an emerging, is to hear what you would want as a buyer, and to make sure that we bring that type of supply to market. It's an early market, so prices are, that 10 times was never paid. Prices tend to be low, in my view, at the moment, relative to the competitive differentiation that can be created with it. And suppliers are willing to accept it because their measurement is good, but it's not perfect. Their landscapes, it's the first time they do it, so they themselves are still getting a bit used to how the governance of it works. And they understand that in a marketplace, that type of risk and uncertainty is compensated through a discounted price.
All right. Thank you so much.
Devendra and Patrick, there are a few questions that have come through chat. So just want to go through that as well.
Yeah, my pleasure.
So first from Stephanie, she's mentioned, how are the projects funded initially, and how are the proceeds used, and how is the integrity of the nature gains guaranteed over time? And I think that's linked to another question that Nicole asked, is, when you say that companies buy the right to claim, is that trademarked or documented through the government, assuming another registrar in some way? And what physically stops another company from advertising this?
Okay, there's a few things there. So in terms of funding, most existing landscapes that do wholesale nature restoration, they've been funded through various forms of philanthropic funding. They've got membership, like if you take the RSPB, it receives a little bit of grant money. It has a membership that pays out money. It gets money from wills, etc., etc. The problem that a lot of these landscapes have is that sourcing of funding to keep going is really very time consuming. And it takes a lot of resource in terms of people. In some of these organizations, there are almost as many people looking for money as there are people doing nature restoration. So we want to change that model where they can go to where everybody else gets their money, every other business gets their money, which is the financial sector, the sector where I came from, where there are actually trillions of dollars looking for investment opportunities, and pension funds in particular are very keen to provide the funding. Pension funds are the largest pool of money on the planet, and they're interested because the savers of today, i.e. the people that are putting this money in, they are the retirees of tomorrow, so they will retire, say, 20, 30, 40, 50 years from now, and they are keen that their money that goes in is being deployed in ways that will give them a viable world to retire into. And I personally, just by sheer circumstance, know the chief investment officer of the largest pension fund in the world, 800 billion, and they would love to reallocate 1%, 2%, 3% of that portfolio to what they call natural capital, essentially enterprise of nature restoration as a service. But they can't, because they need a return on investment. They cannot tell their pension savers of tomorrow, thank you for the money, we've put it in a landscape, but we can give you no return from it, so you will retire on nothing. I'm exaggerating to make the example. So they are looking for a marketplace like us, where these enterprises can monetize the gains of nature restoration as a service. So that's where funding for all other walks of life, that's how it works, the model. And it's kind of just an anomaly in the nature conservation market that it hasn't gone there yet, but it is going there. And that will solve all the funding gaps that currently exist, because I think there's probably about $250 trillion of investable money slushing around in the world at the moment, and a lot of it is interested in doing this. With respect to integrity, this is not a different issue from what exists today. Everything is still in flux, and that's the problem. We want to promote the creation of professional enterprises that do landscape restoration, nature restoration, ecosystem restoration as a professional service. This is their mission. This is what they are about. They are not distracted by something else. And think of it almost in the equivalence of a pharmaceutical company. A pharmaceutical company, underneath the label of, say, AstraZeneca, are hundreds of research and development projects, some that work really well, some less so, but they have an entire governance structure around that, and they are regulated around that in order to do that with integrity. And the regulation can work because there are not millions of counterparties all doing small projects. There are professional counterparties that they can talk to, that they can regulate, that hold to account. And we think of nature restoration, because of the scale and speed at which we need it to preserve the livable planet as we know it, we want to promote it getting organized in that way. When we talk to projects and companies like Eden and the RSPB, Rewilding Europe, those are those types of companies. They want to do the best product they can deliver. They don't want to play the game the whole game by putting lots of elephants in where none belong and so forth, because they know that's not a sustainable proposition. It might work once, but then it won't work again, because these elephants will do things that the thing can't deal with, and ultimately it will be their loss in the longer term. So that's kind of where we are with funding and integrity. With respect to the claims, so there is in the transaction, so you buy a nature restoration game, you essentially have bought yourself the right to make claims. That right is documented in the title deed that you receive. It will tell you what you can claim or not claim. So you can't claim that you own the land, because you don't own the land. The land belongs to the underlying landowners, farmers, land managers. And it's very similar to farming. You've not bought the farm, you've bought the grain or the apples or the milk. And so you acquire an amount of additionality about which you can make a set of defined claims. Well, and then that's in the trading contract. There were companies that could pretend that they have bought them when they have not and make claims. That's called fraud. It will happen in any walk of life. There are people that give that a go. I think because we have such rich documentation as to what we sell, it'd be really easy for us to find out that somebody's claiming something that they actually don't own. We wouldn't take us more than a few seconds to look that up. Might have to be brought to our attention, but likelihood is that somebody will bring it to our attention, either the landscape, because they become aware that somebody else that they know they haven't sold to is making claims, or the company that rightfully owned the claims all of a sudden finds itself in competitive markets facing off to somebody who makes exactly the same claims about the same landscape and so forth. So that we can verify that, and then it becomes just a simple case of asset rights. If you own a property and somebody else suggests that they own it too, there are very established legal procedures as to how you go about protecting your property rights and convicting people that fraudulently use them.
There are quite a few questions, but there's one thing that came up on social media as well, and that's in the projects in the, I would say, in the global east. So are there Any kind of plans for projects in Asia, especially India or China, places like that? I know we just notice all the projects are mostly based in Europe and
Yeah,
one project in Costa Rica.
yeah. So we're expanding circles, if you wish. We started in the UK because it's where the company is originally based. It's where there's a lot of financial services skill, and it's where we knew some people. We've expanded into Europe. We've expanded into Latin America. The RSPB owns a lot going further east. We have spoken to interested parties in Southern Eastern countries. Nothing has emerged as yet, but it's not a difficult model to engage with, because you're looking, first of all, there has to be already an established element of additionality, and people have, and so these people may feel immediately spoken to. We have it, let's start engaging it, and let's start organizing ourselves properly so that we can deliver this additionality and then any future additionality with integrity. So we think that I think TNFD demand will be a big catalyst of development, because you now have early adopters, just already 320 companies, and there are thousands more that are by law going to be compelled to disclose their harms. And a lot of them, because they're B2C companies, will have a keen interest to not just show harm, because that's not good, but also show their nature positive credentials. And for that, they will want to buy from third parties. They will want to buy into these landscapes and say, I want these rights to claim. And I think once that happens, we will find very quickly, because you play that out relative to your customers in local markets, we will find very quickly that marketplaces in the East spring up, because Thai customers, Indian customers will want to know that's all good and well, but what happens in my place, because that's what I care about. And companies that are selling to these people, whether they're global brands or whether they're local enterprises, will start saying, well, we need local supply because we want our customers to come into these landscapes.
Great.
Answer
Devinder, do we have
your
time for
question?
one more question, by any chance?
Yes, I think we can take one more question.
Okay, I think the last one, I'm just going to pick one here. Well, it's a question, I think, again, from Stephanie that came in on how do NRGs count as carbon reduction when they're already in existence? That's the impact is already accounted for in current net carbon emissions.
Correct. So when you, as I've mentioned earlier, whether you can use the compliance part of an NRG will depend on the market where you are and the regulation that applies in the market where you are. So if it's already accounted for when the budgets were set, it can't obviously be used again. That's very simple. And in some countries, there's more permissibility than in others. The accounting has been done a bit differently than others. And in some countries, there would therefore be a carbon opportunity that arises, and in others there won't. By and large, we disencourage our buyers to think of an NRG as a carbon play. We think of what we really, really want is to see nature restored at scale. And ultimately, that's what our customers want too. And for that, we want companies to take pride in channeling money to restore nature, encourage the restoration of nature here and now, because destroying it today with a promise that it will be restored in 20 years from now, it's too late. We will be beyond these tipping points. It has to be aligned in time and in volume, not just in volume, but the time is a decade or two out. So we want companies to think of restoration of planets. You have this marketing framework with the 7 Ps of price, promotion, place, etc., etc. We want corporate teams, the marketing teams, the management teams of companies to start thinking, in order to compete as a corporate citizen, we need to, in real time, offset the harms we do, because it's only real-time offset that matters. And for that, we need to have businesses that do this already in anticipation of a call. And that's okay, because they can find funding. And we're in that transition phase, obviously, where we come out of one model going into the other. And so sometimes it creates a little bit, but we must make that conversion, because if we don't, we never get there. Project finance within the capital markets, which I know good well, is a tiny fraction of all the money that goes around. And we always talk, oh, we've got a big funding problem. It's completely within our means to solve the funding problem. And the last thing we should do is be stuck by some accounting concept. And we should look at reality. And reality is, here in the UK, there's probably about 3 million kilometers of farming land that is uneconomical farming land. It could be really good nature restoration land. It's not doing it because the incentives of transition aren't there. But the farmers, if they could earn a livelihood out of it, i.e. they could sell the vintages, they would do it probably tomorrow. I exaggerate for effect. And the financiers, if they knew there was a return, they'd come in tomorrow. Finance is always interested in a good opportunity. But it's the thinking about the rules that were set many years ago in a project fashion that is preventing that transition from happening. And the government would readily acknowledge that. And it helps no one. It doesn't help the farmers, doesn't help the planet, doesn't help rural communities, doesn't help no one. And so we're trying to break that, but it requires entrepreneurs on the land to have the courage to do this as a new service. And it requires the courage of buying companies to say, we will go for real-time offsets, and we'll showcase that by buying nature restoration delivered.
Thank you, Patrick. That was great. For the final message, we have some of the other alternative credits, such as plastic credit. Plastic credit is preventing plastic pollution in oceans and is supporting the communities living near the oceans. And it is for the first time with Green Story, you could do plastic offsets in real time, and through widgets, it can show real time on the website, on your website to your consumers. And the certificates are issued in partnership with plastic banks, where the certificate can be issued to consumers or the companies. And similarly, we have partnership with Trade Water, which is helping reducing the ozone depleting gases from releasing into atmosphere. They are working specifically in reducing methane emissions from oil and gas wells in US and globally. And if you want more information about them, we have already done webinars, so we can share that with you. If you could write to me at devendra@greenstory.io. Thank you so much for your time, Patrick. It was a wonderful session, and thank you all for being part of this webinar.